Good evening, ladies and gentlemen. This is Clueless Trading Frank. This is a strategic, I would consider it to be a critical market update webinar on Wednesday, August 15th, the hump day, Wednesday, August 15th. Couldn't be better. Middle of the month, and it's a Wednesday. It's approximately 8:11 p.m. This session will be recorded, uploaded to the Clueless Trading YouTube channel, and anyone who misses this can certainly review it at their own time. Sooner the better. And of course, spread the word around that the Clueless 8 Google YouTube channel is available for viewing for all the free videos that's out there, and to get a better understanding of what happens with our financial markets. More importantly, how we can all improve our trading. A quick reminder, important reminder, like I like to do with everyone, is we have a terrific Clueless Trading Instagram account. Anyone who hasn't followed it yet and is a member of Clueless Trading needs to do that. It's mandatory. Okay? If you don't have an Instagram account, just create one and just follow. It's extremely important. It's a very powerful resource to review multiple visual charts, quick 60-second, 1-minute recordings done by my terrific marketing director, who's also a trader, does an amazing job. And it's a quick way to review the highlights of the day, and things are posted there at the end of the day every evening. So extremely valuable resource, and highly suggest that you guys all do it, because it kind of, even if you weren't there trading that day, or you were out for some part of the day, or you didn't take that trade, you're going to see the highlights of what we did. Very, very important, the Clueless Trading YouTube channel. We also have a presence on Facebook and LinkedIn, and the public Twitter feed, which is Clueless 8 FR. Okay, Clueless 8 Frank Robert, Clueless 8 FR, which is directly connected with StockTwits. So anytime that I'm putting stuff out in StockTwits, it shows up on the public Twitter feed. Anyone can follow that. All your friends who are not members can certainly do that. And of course, all the content that's posted on the Instagram is also shared across these multiple social media platforms. So please follow us on Instagram primarily, and then the other social media sites if you choose to. Spread the word for Clueless Trading by posting our link on your own social media sites if you wish. And we'd like to get more traffic. And for a better choice of word, we'd like to get more eyeballs to see what we do here. We are a small, powerful, exclusive trading service. That's really what it is. We do things differently, and we don't spend, we don't, not necessarily spend, but we don't go out there and market ourselves like some sleazy snake oil salesman saying that, well, anyone who joins us is going to take $100 and make it into $1 million in a month, which a lot of trading services out there do. We have testimonials from real members, not fake testimonials, real testimonials, feedback, I'd like to call it. And the feedback is, is basically a testimonial to what I do here at Clueless Trading. So certainly, feel free to review those and tell anyone else that you're referring to do the same. Okay. On that note, full disclosure, this is purely for financial education and not for any solicitation or advice. And let me begin. Try to keep this to the point. So first of all, it's extremely important that as traders to mentally calibrate ourselves. Mental calibration, I'd like to call it. It's part of the behavioral game theory of trading. Trading is a very mental job. It really is. Confidence breeds confidence. Misery and pessimism breeds misery and pessimism. And it doesn't matter what happens in the market, up or down, you're not going to make money, because you always have a cognitive bias towards feeling, because that voice in your head, which is that negative part of your brain, always tell you, oh my God, I'm going to lose money. Oh my God, I'm going to lose money. Even while you entered that trade or that investment or that stock. And just like anything else in life, we have to negate that thought. It's not easy. Some people are born optimists, or at least they cultivate optimism in themselves, the way they look at life. And some people are born pessimists. Now, some people who are pessimists like to say that pessimists, what's that saying, are basically realists. They see things what the reality of thing is. Well, if we all honestly overanalyze the reality of our lives, we'd be miserable. You would be depressed every morning that you wake up because there are so many crappy things going on, not necessarily in our lives, but all around us. And that's the same thing with financial markets. Every day that you wake up, they're throwing something at you. The media makes money by creating sensational news. They are always after. Remember, what is a reporter, a financial reporter do? The primary job of a financial reporter is to report. So if you are going to trade off the noise that's out there constantly, and nowadays, and especially in the last couple of years, it's almost constant, the noise. And I'm not saying to cut yourself off from reality. Some people say, oh, I don't watch CNBC. I have CNBC and Bloomberg on all the time around me, especially during working hours. And you have to be connected to what the breaking news is, what the reporting they're doing, but you have to not necessarily incorporate that into your own trading methods. That's the reason why I primarily trade off my charts, the tactical charts, because these tactical charts are what keeps my sanity. I earn my keep to pay my bills, to pay my debts, and be financially secure. And hopefully one day reach the goals that I'd like to reach. Both, I'm talking about this business, especially in this business. So if you're constantly going with what others are saying, what some guru out there is saying about the seasonality of the market, somebody who's been trading for 50 years says, I know it all. In fact, somebody trading for the last 30, 40 years is a complete moron. You know why? Because the world of trading has changed completely. Yes, some basic tenets remain the same. But to come out there and read some almanac, no offense meant to anybody or to almanac, and to say, okay, this is the way it happens. No, it doesn't anymore. The world has turned topsy-turvy. And remember, these are just my opinions. I'm not asking any one of you to change your opinions, but this is what I see. This is what the environment we live in. And the sole reason behind this completely unconventional market overall is because technology has taken over. Algorithmic high-frequency trading programs known as black boxes or bots are the ones which are primarily trading the markets. And believe me when I tell you, I don't know if you have met anybody who writes algos for trading algos. I mean, for professional trading algos, not some service saying, oh, I have a great trading algo. It's all garbage stuff. Okay, I'm talking somebody real professional writing for a hedge. I mean, working at a hedge fund, working at a large investment bank, and a trading outfit, a big one. And I have friends who do that. Believe me, they know nothing about the market in general. They are working off numerical numbers, patterns, all kinds of fancy derivative math, and they're writing these algos. Algos primarily are momentum based. They're picking up on keywords. They're picking on keywords on whether it's an earnings report, whether it's a news flash, and they're and momentum. They're working on momentum. There are very few algos which are contrarian. In other words, they go against the grain. And I had posted an article, and I truly believe this, that as humans, we can beat the algos. Yes, sometimes we'll suffer when they attack. And remember, not all algorithms, trading algorithms are cut from the same cloth, just the way not all humans are cut from the same cloth. We have our own behavioral aberrations, tendencies. We have different mannerisms, different characters. So just like that, a lot of these algorithmic high frequency trading programs have their own style. Some are macro, some are micro, some are heavy, fast momentum, some are longer term, whatever the case. But the key is, as humans, we can beat them. And I do that a lot. Yes, I get caught in a trap once in a while. Wake up in the morning, whoa, markets are down 200, down 300. But what happened? Tactical traders, including myself, we were green for the day. No magic. We took down some decent profits yesterday on these powerful head and shoulder pattern. My tweets were real time. My posts were real time. My trading posts. I said, you gotta take down profits. Markets were soaring till about 2 o'clock, 1 o'clock, till 2 o'clock. Well, 1 o'clock primarily, and then 2. And I said this was going to be a formidable resistance. So as a human, I beat the algos at their own game. Not just one day. I don't do it every day. I can't. They're too fast. But overall, I do. So my goal here at Clueless A Trading is to have you guys incorporate this very powerful tool, which is the Clueless A Trading tactical charts, in your own style of trading. I'm not here to change your overall habits on the way you trade, what your risk tolerance is, how you look at the market, whether you are supremely bearish or if you're, supremely bullish. Nobody is. I'm not crazy bullish. I've never been crazy bullish, actually. Overall, I'm bullish, yeah. I think the markets will go higher, at least retest old highs. So bottom line is that, bear with me 1 second. Anil, can you identify yourself, please? I'm sorry, guys. We just have a new person, so I'd just like to find out who it is. Bear with me for the interruption.
So can you hear me now?
I can. And is this Anil?
Yes.
And who are you, sir?
I was referred to you by my brother.
And who is your brother?
Anup.
Oh, okay. Yeah, Anup. How is he?
He's doing good.
He's still a member, right?
I think so.
Okay. I remember his name. Okay. So how did you get the link to get into the webinar? Just curious.
My brother referred to me to this. I didn't know this was a paid service or
No, it's
something.
not. Yeah, the service, of course, is paid. That's fine, but you're more than welcome to sit in. What I'm saying is, he gave you the webinar link?
Yes, he
Okay,
did.
don't worry. I'm not picking on you. I'm just asking you. It's like, we're having an exclusive party, so when somebody else walks in, we want to make sure that person's okay. You know how it goes, right? So,
Yeah, I'm sorry. I'll just walk out. I didn't know that
Anil,
this was something.
Anil, I never asked you to walk out. Stop being stupid. I said you can sit in and listen to the webinar. So stop
Okay.
acting like a child, okay? Please. We're very busy here. So sit there quietly and listen. I never said,
Okay.
stop acting like, I'm throwing you out. You're more than welcome. Your brother, I believe, is a member. Anup, what's his last name?
Anup Villamgandathil.
Yes. He's a great guy. Good. So stop acting like, I'm asking you to leave. Stop being so polite, all right? All right. So let's get back to the session here. Everyone welcome Anil. He's a new guy. Hopefully he'll become a member and make some real money. All right. So the bottom line is that, so I told people to basically sell here. I didn't think we were going to come back and retest this, this whole gamut and what we call pattern symmetry completion, which would be pretty much here, give or take, but we didn't quite get there. So before I get into the technicals, well, the point that I want to make is that it doesn't matter what type of markets we are in. You can always make some money. Now, it doesn't have to be every day. I mean, today turned out to be a phenomenal day because some of the alerts just went berserk, and then one of our swing stocks just went through the roof, which it has been doing for the last couple of months. You know what it is? Good old Burritoville, Chipotle. Now, why Chipotle was up 33, I think one of the big firms upgraded it. I didn't even bother looking. Why? Because it was already in my charts. I always carried some Chipotle call month over month over month. And what was sad was so many of you, despite my repeated alerts on Chipotle, it doesn't hurt to buy a Chipotle call at 4, 30 points out. You just, guys, don't listen. I'm not your mommy. If you don't listen, you're the one who's punishing yourself because I know the stock's going to higher. I've been trading the stock since this particular day when Mr. Taco Bell ex-CEO joined Chipotle, forget the gentleman's name, joined. And we were trading this, but this was very choppy trading. We were making little money, then it was just falling, E. coli stuff, rats dropping from the roof, monkeys in the kitchen, like you name it, right? Like the attack on Chipotle was vicious, just the way the attack on Tesla is like like nonstop. Yet the stock still pays the bills. Not just Chipotle, Tesla too. I'll talk about the Tesla trade in a minute. And it's not for kids. It's for people with strong stomachs, and you don't have to put that much money on it. You can put a $500. I don't want to sweep into Tesla right now, but I'll cover that chart. You can put $500 in Tesla and take out 5,000. That's serious. It's not going to happen in 2 minutes. Sometimes it happens in 2 minutes. I showed you guys that, where we were up 600% within an hour when he tweeted out. You think it's all over? No, it ain't all over. The stock is going private. Anyway, so it's very sad when people just basically just don't do these things. That's your problem, not mine. So saying all that, look at this chart. I mean, what's there not to like? This is the most systematic uptrend that any of you have seen or felt. And yes, each of these candles are like $5, $6, $7. Who cares? Look at the structure of the chart. The structure of the chart on Burrito is telling you, since we entered this, let me clean this out. There, okay. Since we, okay. Just want to make sure the color was right. Since we entered this trade here, and yeah, I'm a friggin' genius. I took $100, $1,000 here, and now imagine if you put $1,000 here and bought calls all the way out. You know how much that would be? It would be close to $100,000, or at least $60,000. That's serious. So, but no, we don't do that because we don't know what it's going to do. This was earnings gap, so we play it as it moves along. As recently as yesterday and the day before, I said buy Chipotle. Roll over the 460s, 470s, 480s, whatever. Buy the 500, 505s, 490s. The 500 calls on Chipotle, I don't need to remind you. If you guys are blind and not following my Twitter feed, then no reason for you guys to be at Crusade Trading. We're up 842%. The calls went from $3 to 26. 842%. The August 17th. And if you don't think that this doesn't hurt you, then you really don't. You're not hungry. Anybody who's not in it and left that type of money on the table, and if they don't feel any pain or suffering that they left that much money on the table, and I'm not telling people, I'm not telling anybody anything, but but I'm not saying that you put thousands of dollars in a call that's expiring on Friday, but not to buy even one or two and coming out paying for a frigging vacation to Fiji at the Ritz-Carlton, to give you an example. And if you don't feel anything, you don't feel that hurt, then you really, truly are never going to make it as a really big, successful trader. Because just picking up bits and pieces is not worth your time. You don't want to put bits and pieces and become a bits and pieces type of trader, do you? I don't. I don't. Go for the goal. Go for the prize on the top. And we're giving you the tools to do it. So these August 17 500 calls, just an example. And believe me, you'll have multiple opportunities, but these are rare to come, just so you know. And this is not the first time. This move on the earnings, we did about 600%. This move alone today was 842%. This move was good for 600% or more. Now, there's no time value really left in there because it's expiring on Friday. That's why they move like that. So the August 15 500 calls went from, look it up, from they closed at $2.80. Whoa, let's call it three. They opened at 8. Could have bought it during the day. Because I said, sell the 480s, roll out the 505s. Even if you bought it during the day, you made a crap load of money. So even if you weren't in it yesterday or last week or all the times that I alerted, you could have still played the stock today because it was on heavy momentum. All you had to do was dig up the chart or at least follow your chart. But no, very few of none of you, or maybe some of you did it. It's very sad. Can't keep on going like this, guys, okay? So bottom line is that they went from, and I will say this, I will because that's my job to explain these trades that I put out there, monsters. From 3, they went to 26. From 8, you could have bought it. Forget, let's say you didn't buy it at 8. Market's really down. You're like, oh my God, the world's falling about. The Turks are going to invade us, and it's just going to be horrible. It's all over. Stock was steady. Yes, it dipped a bit. The low of the day for Chipotle was 495. I'm sorry. Low was 504. Low of the day for this baby was 504 in the thick of the selling when the markets were down 400, whatever, 504. It ended the day at 526. You could have made, let's say you didn't catch the low of the day. Possible, not. Let's say you bought it at 510. I'm talking about the stock price. The calls at that time were probably around 10 or 12. Let's say you were chasing it. And if you are a penny pincher and you're like, oh, I just want to buy it exactly at that limit price, you will never get those in these type of heavy momentum stocks on a major breakout. Constant. This is a repeat breakout, but this is a big one. Okay? On a day when the markets are down big, and I'm showcasing the stock right off the bat. So if you're doing the limit chasing, you're never going to get it. So let's say 12. And I said by that time, the 12, you could have bought, you don't have to buy exactly the 505s or the 500s. You could buy the 510, the 512 because it's moving, but you buy in the money or maybe you bought the 5, I bet you the 520s and the 530s were up 900%. I'll pull it up on my other screen in a minute. So the bottom line is because, the delta and gamma are faster because it's heading past that. Remember, in the money calls tend to move slower than the way out of the money calls on a high momentum move because the gamma and the delta are far higher. In other words, they got more juice. So because if you like the 475, to give you an example, the 475 calls on Chipotle, and listen carefully because you guys are options traders, right? The 475 calls were up 126%. They were up from 18 to 41. But the 500, which are $25 higher strike, were up 842%. See what I'm talking about, the delta and the gamma? The ones in the money moved much slower versus the ones which were out of the money. Last night, Chipotle was at 493. So the 500 they were the 493. So if you bought the 500 calls, like I said, then they were $7 out of the money. Those moved 842% from 3 to 26, exploded. So you could have caught at least 5, 6, 7, 8, 9 points in the middle. All you had to do was open your eyes, put that little voice in your head screaming at you saying, oh my God, it's all over. I'm going to lose money. I'm not going to do any trades today. I'm going to wait for confirmations and all that garbage. you left all this. So now it's here. This chart was drawn way back, by the way, way back. Okay, and you guys know that this chart was drawn way back, months and months ago. This chart was constructed all the way. Well, it was constantly being constructed, but the full construction of this magnitude came about in the months of April and June. April to June. By the time the stock broke out, this chart was already constructed. So it was mostly in the month of April to May when this chart was constructed. All you had to do was just trade it. You're going to give me a bag full of excuses? Well, I'm not here to listen to it. You give yourself excuses because you left a lot of money on the table. Here's the good news, guys. Wake up time. Stop being a complete pessimist and look at this chart. The stock is going higher. Yes, the stock is going to go to this acceleration channel up here, which is around the 540, 545 level. That's $20 higher from here. So what happens? Another E. coli things happen. Rats drop from the roof. Doesn't matter. Those are short-term issues unless they have a major E. coli breakout, which is real. A lot of them are fake. Just so you know that. People get sick. They love going in bashing Chipotle, just the way most people, including many of you, love bashing Tesla. Okay? So it's like a love-hate relationship. The burritos are poisoned. There are Iranian spies inside the tacos. Just name it. They'll just spread anything. There's a whole site called whatever, which just does nothing but look for like, oh, who got sick today on Chipotle, burritos. That's serious. Because it is a business lawyers love. Squeeze out a little money. All right? Sharks. New York has a lot of them. So at this point, look at the technical. 534. Is it going to go all the way up to 600 right away? No. But is it going to go all the way up here? Mark my word, it is going to do it. It is going to do it. Unless they have a major health issue or their operations with all the different stuff that they're doing doesn't completely pan out. But along the way, it could very well come and test 500. It could even come down and test this lower channel, which is 475. That's why we trade charts. In fact, I want the stock to pull back a bit after it surges towards the 540 level, which is going to happen pretty much, could happen by Friday. But it's happening in August. In fact, it's going to happen because now the surge is big. The stock was up almost 7% on a rotten market, and restaurant stocks are doing well. And Chipotle is way off the highs, $800 stock. So, classic technical, included say technical charts. St. Regis at Bora Bora. Scott, you make me sick, man. That must be gorgeous. Any of you don't know what Bora Bora is, it's not on the Chipotle menu. It's one of the most beautiful islands out there. Okay? And Scotty obviously knows. Good taste, brother. Okay, so the bottom line is, I would like the stock to pull back a little bit, but it doesn't matter what I like, because if it's going to surge, it's going to surge. And I think there's a lot of shorts still piled into Chipotle. So this could very well surge all the way up here, which is in the 580 level, which is my fourth channel. So do keep an eye on that, because I'm not here to spend all night, walking you guys through simple charts. It's volatile, $5, $6, $7. I love it. As long as the internals, which is the simplest internal, the stochastics on the daily, don't start winding down. In that case, it's going to be winding down here, which is, again, a buying opportunity. As long as the stock stays above 443, right there. This was the previous gap fill, right there. As long as the stock, and I'm giving you, look, I gave you the stock at 280, 300, 400. I'm giving you the stock at 500. Okay? So I don't, a good member, Kathy, I love her. She made the silliest comment today. I hate Chipotle. I lost money on that. I said, what does it matter? That was a long time ago you lost money. So what, do you live with that baggage all day long? Look, I'm a boot camp coach, all right? I'm not going to entertain bad habits. So I do apologize, Kathy, if you listen to this, that I didn't ever mean to hurt your feelings about a burrito and that you lost money on it before. I was only trying to make you money all the way from 300. I think you weren't a member at that time, all the way from 400. You were a member at that time. That's all. It doesn't matter whether you lost money on a stock before or not. It's what you're going to do with it now. Some people say, oh, I don't trade biotechs. Okay, whoopee, that's fantastic. Because they're really dangerous and I lost money on it before. Who cares? Mental calibration. Please. And that includes me. I have killed a lot of my bad habits and my opinions and stuff. That's why I am what I am today. Completely clueless. Clueless about baggage. That's what I am. Because if I sat around thinking how much money I lost back in my earlier years, would I ever be trading? I've lost more money than you guys can count. Believe me. All right? Dead serious. And I'm not kidding. If I add up. And I made back 6, 7, 8 times that. So what do I say? Oh, I lost money in that stock. I'm not going to go there. Anyway, let's move on. So bottom line is, those are kind of stupid thoughts. Just get it out of your head. So at this point, the stock looks really, really good. This is like a significant breakout. Now, can somebody tell me why it is a significant breakout? What happened? I hate these little things that investing.com puts out there. Hold bullish, bullish continuation, reliability high. We already know that. Why is this? Why is this so important? Please, I want to ask you guys so you know what the heck you're looking at. Why is this line so important? This level. All-time high breakout? No, it's not an all-time high. It's an all-time high on the daily, maybe. The all-time high on Chipotle is 800 and change.
It was resistance, so now it could be support.
It's a major. It's a major. This is from the last time the stock was here was. It's a multi-year breakout. Let's just put it this way. It's a multi-year breakout. Now, the way I look at it as a technician, and the way you guys should look at it, is not your fault, Scotty, because I put the frame here on a daily. That's why you said it's an all-time high breakout. So you are correct. The way I look at it, this is a massive cup. It created a very minor handle, and now it just said, "See you later." Whether you like Mexican, well, it's kind of fake Mexican food, right, Chipotle? I've had real Mexican food. It's really tasty. The ones here. So the bottom line is, it's a massive, massive. How many times am I going to say massive? I sound like my buddy Donald. It's massive. It's huge. It's very huge. Cup and handle breakout. This is a cup. This is a handle. How many times have I showed this on big stocks? And here's your breakout. So honestly speaking, a lot of new money now is going to enter the stock, believe it or not. They were waiting for this to happen. There are old-fashioned technicians who are always waiting for a confirmation. Remember one thing, in tactical trading, clueless A trading style, and the new normal of algorithmic high-frequency trading, we don't wait for big confirmations. We buy them when we start to see patterns developing. That's where the big money's made. Now, there'll be big money made here too, because the stock is going to go to 680. Along the way, it'll pull back, retest this 500 level, which it should. It's mandatory, because the cup, once it breaks out, remember, there's your neckline. It broke above that. So it should come back and retest it. It should slip a little bit more. Maybe creates a second handle. And that second handle maybe brings the stock down to 460. So media and CNBC and all those great gurus, idiotic as many of them are, some of them are excellent, by the way, what do you call, will say, oh, now it's all over, the momentum's over, nobody's eating their breakfast menu and stuff, and all that garbage. And we will be big time buyers again. But this is, like I said, a major breakout. So as an institution, they are moving in because now it's a confirmed breakout. It's a multi-year breakout. 2015, 2018. Depth of the cup, please. 500, 246, 250 points. Correct? You understand what I'm saying? The depth of this cup is 250 points. One way or the other, on a swing trade lasting a few months, the stock will add 250 points to the 500 level. The stock will go to 750. One way or the other, it's going to go to 680 to 750. Go get yourself a burrito bowl. All right? Enough of Chipotle. I called it here. I called it here. I called it along the way, and I'm calling it here. And I just gave you the simplistic technical explanation. This is big. And remember one thing, Chipotle is like a cult. It's like Apple. People who go to Chipotle, they just love it. Rats or no rats, E. coli or no E. coli. And the new guy, I said it from day one. Listen to my video from months ago, from back in April when he joined. From this day, I said he's going to transform the company. He is a turnaround specialist. He has turned around the most garbage chains like Popeyes and stuff into money-making behemoths. Why can't he do this with this? Okay. Back to everyone with me so far? Yes? Anil, do you understand anything we're talking about? Anil?
I'm trying to.
Okay. But you understand some of the things we're talking about, how things going up, the lines and things like that, right? So at least
I'm new to this. I'm new to this. My brother wanted me to check it out. So
okay. It doesn't matter whether you're new or not. You're a
I-
smart guy, right? You work in IT?
yes,
Okay. So that means you're smart. So what we're
I
explaining is
think so.
exactly. But the problem with the market is the market makes smart people look dumb. You know what I'm saying?
Yeah,
So what I'm explaining to you in
and
simple English, you understand what I'm saying. But you're smart. You just don't know how smart you are when we are dealing with charts. That's the reason we trade charts, because charts, IT guys, especially guys like you who are basically more numerically orientated. You know, logic has to come into play when you're in IT. You can't be like, oh, maybe this is going to happen. Then the whole system's going to blow up. So you guys tend to be far better as technical traders than other people like lawyers and doctors and stuff who are a little bit too full of themselves and with too much opinions. They make crappy traders. So you would make a great trader as long as you learn the skills. You understand what I just said?
yes,
Exactly.
I'm here for that.
Okay, very
Yeah,
good, very good, sir. Glad
yeah.
you're here. All
Thank
right,
you.
let's move on. So this is where we are, guys. Let's go back to square one. So we're talking about what's going to happen. Well, what's going to happen is we're going to come down, retest this right shoulder again, and we'll see what happens. Now, this is a short-term picture, right? Remember, this hump here, the 28.45 level on the E-minis, it's heavy. There's a very fat man sitting there. He weighs 800 pounds. And he's saying, I won't let you go over this. So we'll see. Now, previous times, we have had big movements above. And just as recently as the 3rd of August, if you remember, we were there. We took out this previous, excuse me, if you go all the way back, that was another shoulder. We just took it out and ran. Here is what you all need to do. You need to have setups prior to that happening, because chasing it here will make you zero money. In fact, it'll lose you money because you're too late. You have to have the setups, small amounts, doesn't matter, because small gets big. How many times have we seen on these type of breakouts on a Friday, or on a Thursday with no time value left, just the intrinsic value of the options up 300-400%? I'll give you the answer. Quite a few times. Why? Because that's what volatility algos do. But if you're not set up ahead of the game, you'll never reap the rewards. That's why here at Clueless A Trading, we tend to buy in this zone. Even if it slips and slides tomorrow and it comes down to 27.90, heavy duty buying. I'll buy. Why? Because I know there's going to be a reflex bounce, just the way I knew there was going to be a reflex bounce today once I started to see these candles appear. And I kept on showing it to all of you. Some of you took advantage of it. Some of you just sat around, waiting for the perfect moment. Today, and maybe for tomorrow, today was the perfect moment, ladies and gentlemen. Just the way this was the perfect moment. But the perfect moments can be landed in front of you as technical traders, but many of you choose to just run away into your bunkers with your diapers. That's serious. You can't get any better than this, guys, all right? Seriously. And I'm trying to help you, but help yourself. You can't get any better than this. To call the shots like this, where I pre-market said we could possibly test the 2793, 2790 to 2800 level. I'm a pattern specialist. I look at a chart, I see patterns. You guys might be looking at a chart and you might be seeing a lot of red candles and green candles like, oh my God, what is this? I don't get it. It's not that hard. Like I said, a child's brain, which is less baggage, can figure out this chart better than many of you. So saying all that, I see the pattern. It's still on the broader picture, a head and shoulder. So what? I can still get 60, 70, 80, 100% on the SPX calls, which we did. The 2820 calls went from $4.70 at the low to $13. I'm sorry, not to 13. They closed at 10. That's 100% on your money during the day. Let's say you didn't cash the 100%. How about taking 50% of that? It's like I'm writing free checks here based on these technical charts, and so many of you are just like, no, thank you. I don't want to make money. What are you doing here? Pretty funny, huh? Yeah, seriously. Those were the 2820s, and I said buy the 2830s. You could have bought whatever you wanted. The 2840s, which are out there, went from 70 cents to $1.80. Ladies and gentlemen, that's 120%. Yeah. And the SPYs did the same thing. And the SPYs are cheaper to trade. Well, these SPX calls are cheap to trade too when they're expiring on Friday, which is monthly OPEX expiration. So that's your shorter term picture, the ES15. You can trade this very actively. Now, we would have loved to have seen this. But it's good enough. We're back in the channel. Maybe we get up here, or maybe we fall. We fall, we retest this, maybe we slip and slide. Not a single person in the chat room, which is great for me, so I don't have to communicate too much. Seriously. Less taxing on my fingers for typing and stuff, because everyone just runs away, like scatters. And I'll be a heavy buyer. Bring it to me. I'll be a heavy buyer, because I know that reflex bounce that I get is going to be good for 100, 120% of my money. What's there to it? You guys are not running funds, billions of dollars. What do you care what the big picture is? What do you care? You want to make money for the day, for the week. Am I right or wrong? Yes or not? Somebody give me a straightforward answer. Yes or no? Do you consider yourself to be a fund manager managing $30 million, $100 million, $1 billion? Do you consider yourself a trader who can make a couple of $1,000s a week? Todd, first day here, 60% on Apple calls. Why did he make 60% on Apple calls? Because he looked at my chart. More importantly, he said it's the lottos. Let's go get it. And I kept on showing it. And don't worry about saying great job, Frank, okay? But I'm very pleased with you that you did it. And that's a new member of ours, Todd. So guys, from a behavioral standpoint, before I move to the next chart, remember one thing. Most of you, some of you, I think, I don't know, whoever. But whoever wants to think the big picture, you're not a frigging fund manager. My first job was a junior analyst. I get coffee for my boss most of the time, parked his car in Boston, in Post Office Square. I saw how the mutual fund industry worked before I moved to Wall Street. So if you guys have this big picture thing and you're trading with, what are you trading with? I mean, even the biggest retail trader is not trading with more than 200,000 bucks. And if they're trading with 200,000 bucks in options and stuff, that means they're seriously putting in some real juice in the picture. Because with $50,000 in options, you can make $500,000. You can, because I show it all the time. And with 5,000, you can go up to 20,000 in 48 hours, done the right way. So if you want to, the key thing about a retail trader, and this is where mental calibration comes in, and please listen carefully. Stop focusing on the big picture and missing out on making money every day, every week. The market doesn't care where it was the day before. That's the difference between the markets now and the markets of yesterday, from a couple of years ago. The markets don't care. And you all need to stop thinking so big while you stay in the doghouse because you don't make the money you should be making. You get it? I hope you guys do. Every morning when I get up, I look at these charts very quickly. All right? So this is the hourly chart. So it's cutting out a lot of the bars, right? Each candle is a 1 hour candle. Here's a major breakout level that goes all the way back. I'm not going to scroll down, but that's why I have it there. I didn't put the breakout level just because it looks nice. It's an important breakout level. We broke out of that back on the 2nd of August. And very importantly, repeatedly yesterday and this week, I've been putting the dates, the pattern symmetry that I keep on seeing. I even draw those arrows on my charts, right? Big ones, those big orange ones, showing you where the markets basically broke out of, where the movement started. I would love to have seen the market at 27.90 here today. But the market doesn't always have to do that. This could be construed as a possible inverted head and shoulder with the head at 27.90, with the left shoulder at 27.98, 10 points higher there. Right shoulder. Remember, this is what a inverted head and shoulder looks like. It's the bullhorn. Very powerful patterns. So in between this macro bearish head and shoulder, where this is the head, this is your left shoulder, this is your right shoulder. Look at the patterns we are playing. W, dragon bullish. So this could be looked on as a large inverse head and shoulder with the head here, left shoulder, right shoulder. And this move alone was good for 120%. And you don't have to hold it. You could close your books at the end of the day. I closed my books on my fast trading money, a lot of it yesterday, when I said we were going to hit this move, and then this happened. I knew there was going to be resistance there. And stocks were flying, right? Remember? Multiple trades. I'm not going to even repeat them. Go on my Twitter feed and read from yesterday. I said sell full or partial profits. What part of English doesn't people understand? Full or partial? Come on, guys. So anybody who didn't listen to me got clocked big time when this happened today. And then they froze and didn't act and didn't make any money. And they're sitting on big fat losses. All I have to say to them, you guys deserve it. The ones who did it, you deserve it. Wednesdays generally are red hump days, they're reset days. So one or the other Wednesday was going to be kind of red. It's not a rule, but generally it is. There have been many Wednesdays when the market has been red. We know that. So at this point in time, the path forward, because it doesn't matter what happened today, what happened yesterday, where is the path forward? Remember, there's an old saying on Wall Street. It's not where stocks are coming from, it's where they're going. Remember that. It's not where you're coming from as a trader, it's where you're going. That should be your concern. You could be an abject failure in what you did before. You could be a huge success going forward, as long as you change your mental calibration to becoming more of a technical trader through, let's say, trading style. Period. So at this point, I see patterns. So let's look at, this is a big pattern, but let's look at this. Maybe it pulls back a little bit. Patterns don't have to be completely identical. One way or the other, I believe we are going to get up there, hit that shoulder again, and possibly because that shoulder really comes into play at 28.45. And here we see what happens. My gut tells me that given the ferocity of the volatility moves and the VIX hitting 15 and all that stuff, there's a good shot that we take out that shoulder. Now, once we take out the shoulder, is it all like, oh, we're going to the moon and all that garbage? No, that means we get massive resistance again at 28.50. It's all there. See, look, all there. This was a double top, which I identified also. Please go through my Twitter and you can find. I called it a double top. I did not know. I never know that it was going to fall like this. I expected a pullback, but that was a double top. It's defined. So 28.50 becomes a major resistance. So that's how we're trading. Futures are down about 2 points. If they move back, you know exactly where the levels are right there. That's why I have a blue arrow here. Remember, follow the arrows. I told that to a free trial member. They got really offended because they said, I don't understand anything about your charts. I can't find anything on your website. I said, I told you, there's nothing on my website. My website is informational. Great chat room to interact with members, ask questions, stuff like that. I'm there. But everything is in the Twitter feed, content. And then I said, why don't you just follow the arrows? And they thought I was being condescending. And I said it in a nice way, just follow the arrows. So some of you are not just completely technically challenged, like don't understand anything about candles or charts. Just follow the arrows. All right? That's my new theme. Just follow the arrows. Because that's why I spend so much time putting these arrows. These are levels of demand where the buyers come in, and these are levels of supply where the sellers are. So not much to explain about this chart. This is what I'm looking at on a big move. Of course, the downtrend lines, everything is there. You just have to focus a little bit. Stows are still moving higher. We did slip. Today was a pure capitulation in many ways. We had almost a 4-to-1 down day on the advanced decline line. We had Trin, wow, at 1.6. Now somebody goes, what's Trin? Well, that's also not on the Chipotle menu. Trin is a measure of what we call actual buying and selling, the buying pressure to selling pressure. And and if you want to learn about it, go and Google it, or just go to Investopedia, the Trin Index, which was devised by the ARMS. It's called the ARMS Index, devised by, I don't know, forget his first name. The gentleman, I think, is still alive. It's a fantastic measure. When it gets really high, that means things are just going loopy. Okay, lots of selling, and you want the trend to be kind of, slightly below 1. I don't want to get into it right now. I teach all that on the ACS in order for the market to sustain itself. But it gets this extreme, that means just pure panic, which it was today. They sold everything, yet we made money, and then they ran the market back. So this is your daily chart. The daily chart is more mixed, as I explained on my previous video on Monday night. And I was right. We're still in the consolidation channel. We do have a Chinese rocket type of candle, which is a reversal candle right there. But a hammer reversal, which I like, is the one with a longer tail and a green body. So this is a shorter tail and still a red body. So the preponderance of selling was still there. The stows are, I drew this line here. That was the last support when we fell apart and then ran back. That's where the stows went to. And that's why I have this line here. And we'll see. It could break below that. If it breaks below that, that means we're going to come down and retest 27.91. If somebody's waiting for confirmation, they're never going to get it. There is no confirmation because you could have a green candle, next day it can be red, yet the uptrend continues. So there's no like real big confirmation like, okay, that's it. We're just, the only confirmation you get when you get a double barrel, multiple, 2-candle move. That means the third candle is very likely. You get a 2-candle move, but the algos mix it up a lot these days. But generally speaking, you get a 2-candle move, it's going to be a continuation pattern. So here you're still playing some very nice returns in the 60 to 80 to 100% type of range intraday. and you can still trade it, because by the time the next candle develops, you are going to be up at resistance again on top of this consolidation channel. Does everyone understand that part? People who understand technicals a bit, because that's a consolidation channel. So you could get a huge day, 300 point type of day, but all you're doing, you can make a lot of money as long as you place yourself in this range, or you get in there first thing in the morning, depending on what I'm putting out there, depending on what you're looking at. But by this time, it's going to hit the 2850 level. Bingo. It's probably going to do this. The market could very well keep on doing this, just so you know, till it gets down here and then just go nuts. Because that's what bull flags do. This is still a bull flag, by the way. Remember what a bull flag looks like? This is what it looks like. Up, overall, and then pulls that. There was one bull flag here. This one's here. This one broke out. This one could possibly break out. But we know what the downside is, that this level here. And the worst case scenario is 2750 if we get there. And that's when all hell breaks loose. So this is what a bull flag looks like. This is a consolidation channel. I've explained that in basic chart pattern analysis on my Clueless 8. And Anil, you should go there, listen to it. On my Google YouTube channel, there is a whole folder called New Member Introductory Videos. I explain all these patterns in the simplest terms that anybody can understand. Even my mailman can listen to it and say, hey, I get it. So you guys will definitely get it. All right. So what happens with
on your website, is it?
It's on my website. My not website. I said the Google YouTube channel. Okay.
Google YouTube channel.
Yeah, go to YouTube channel, ask your brother, but you go. You don't need to ask your brother. So just go to Google, type in on YouTube, type in Clueless 8 Trading, put your email in so you're a subscriber. Anytime I'm putting a free video like this one's going to go up there, you can listen to it. In there, there's a category, a playlist, and this applies to a lot of new members too, which says New Member Introductory Video. In there, there's a whole bunch of videos explaining all this stuff, all these patterns and everything. All right?
And thank you.
Yeah, and also there's fantastic resources out there on YouTube, with guys explaining all this stuff. But my stuff, if you want to know my style, go in there. New member introductory video. So I've always said in my introductory sessions too, is that when the markets are moving up like this, people, most traders are kind of okay. The minute, most of them don't buy down here like we do. Okay, most of them, some of them start buying at the top because it's confirmed. Duh. The algos know when the confirmation's coming, but that's you're hitting that upper range of the level. So no more confirmation. They bang the market. It doesn't go in a straight line, one day down, one day up. That's exactly what's going on here. That is exactly what's going on here. This is overall. This was the first consolidation, broke out. This is the second consolidation channel. That's the reason why we have these two lines. So every time that there is a consolidation channel along the way, traders just get frazzled. Like, whoa, oh my God, the big bad bogeyman's going to come and just, bite us in the middle of the night. It's just a consolidation so far. Things completely break down, as I've completely explained, below this. And even then, there is major support and then the final support at 2750. But so far, I have to respect what the charts are telling me. It's still within the consolidation channel with a major support. Because remember, we went like this, and then we went sideways for about 2 days. Then we broke out. We came down. I thought we were going to come down here. We did, actually. So this is a sideways trading range. We broke out of that trading range. Now we come back and retest that trading range. We slipped a bit. That's why you see this thing here. We slipped a bit there, but technically nothing changed. And things got severely oversold on the 1 hour and the 4 hour charts. So if you want to be technically orientated, you don't need to think of doomsday, because all the market did was broke out of the bull consolidation channel, came back and retested it, went up, came back and retested it, slipped below, There's a level here that from way back here, from previous crash zones, I'll show you. That's the reason why this line is drawn. You might think like, why'd you have that line in there? Well, care to look? Right there. This line was drawn way back because this was where we basically broke down back on the 13th of March. On the 13th of March. Okay, those big crashes. So that's a that's obviously was a resistance level. We broke out of that after we tested it a couple of times. Now we came back and retested it. That's the reason why you have the line there. But realistically speaking, this pattern here can I shouldn't say easily. I should never use the word easy. If, like I said in one of my trading mottos that I put out there, trading, what is it? Trading is easy. It's just not simple. Or trading is simple. It's not easy. In other words, you got to put in the grunt work to understand this stuff. Overall trading and making money is not that hard. But it's all the screwy stuff you do in your heads as traders is what you guys need to fix. So if it did this, why can't it do this? And that's a lot of money. From 28.19, where we closed at roughly, why can't we do this? 28.60. So that's why you got to keep on looking at these charts, trying to understand, sign up for the ACS sessions, do your own stuff, and stop hiding under the bed. Because honestly, technically, nothing happened that big, technically speaking. Yeah, individual stocks got sold off. Boeing was down 7, 9 at one point, all kinds of stuff. But technically, we have this buffer zone here. You want to be buyers at this zone in a big way. You want to trade the market in a nice way when you get these reversal candles. We are getting quite oversold. We could get an easy bounce like this, which brings that up here, which means we get overbought again. Then a pullback down. It could easily do this. This is the futures chart on the daily. Same thing as, this is your chart representation of the S&P 500. I like this. I totally love today. Not because it was a great day and stuff. I just love what happened today because all the technicals that I look at all fell into place. It was like, wow, love it. I'm serious. While many of you were just like, oh my God, I can't do this. Everything's like, running away, not doing trades, 800% winners. Look at booking, 400% in 2 hours. After I alerted, you couldn't buy one call at 3? It went to 13. One call at 3 is $300. Could have made $1,000 in 2 hours. Seriously. Not even go into that. The booking stuff, go to Instagram. The charts are going to be put there. I put it on Twitter feed. You guys can see it. I love this pattern. This is most probably what's going to happen. So you got to look at my charts. This is looking good. Don't forget, back, and it wasn't that long ago, back at the end of June, this was a massive resistance. Back at the end of June, early July, when we broke out. The market kept on trading between 27.40 and 27.90. 40 points, 40 to 50 points, 300 points, boom, boom, boom. In hindsight, and this you should learn from this stuff, what did the market do? Just broke out. So the market is now doing the same thing in a wider format. And if you guys care to look, you'll see that this is what the market's doing. That's all I got to say. On that note, I'm going to end this thing. I do want you guys, because I started this conversation with you guys today on mental calibration. It's serious business, all right? Because without that, all this free money that I'm giving away on multiple huge trades, literally giving away to you guys, and many of you are just not doing it. Unless you mentally calibrate yourself through your own efforts, you're never going to make it. So this Dr. Steenbarger, which many of you know, is absolutely brilliant. And this interview with him, and it's on my YouTube channel as well as it's on the Twitter feed right now. Just click it and listen to it, please. This man is just brilliant. He coaches billion-dollar hedge fund traders, and a lot of the stuff that he talks about, trust me, is same thing that I tell you. And I didn't copy him. He talks about pattern recognition. He talks about focus, laser-like focus, which simply means cut out the noise, just focus on what you're looking at, and you start to see things that you never saw. Except in my case, I'm actually giving you big fat arrows. So let me remind you, just follow the arrows. But please listen to Steenbarger. He's brilliant. It's far more pleasant to listen to than me, and it's really inspirational. This ain't the Oprah show, right? This ain't Dr. Phil. This is the real deal. Clueless 8 trading. Mission statement, tactical trading devoid of emotions. Very hard to do, but if I can do it, anybody can do it. Have a great evening, guys. We'll have a great week. Gotta take the trades. You gotta be in it to win it. Stop thinking too big, like, oh, what's the macro picture on the market and stuff, which I didn't even go into tonight. But all the long-term technicals are intact. Go through my charts and just do what you need to do. God bless you all, and see you guys tomorrow.